Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, let's get talking about the cues and news you need to know for today's trade. We have Naveen who joins in to tell us more of what we can expect. Well, Naveen, yesterday we did see profit booking come through for the markets. What's the setup like this morning?
So as you clearly pointed out, Ekta, yesterday we saw some bit of a profit booking mainly led by the IT index, mainly led by the mid-cap index. Remember, the mid-caps underperformed, were down close to 2%. But the sigh of relief came from the IT index. So this time we'll have to see in terms of how much of vulnerability we see in the mid-caps. Talking about the institutional flows, yesterday was fairly positive. If you see the FIIs, both in the cash market as well as the stock futures market. In the cash market, they bought in close to 700 crore, while in the stock futures, they bought close to 880 crores. DI sold an amount close to 250 crores, but nevertheless, the FII buying, that was compensated for. But as I was pointing out, mid-caps, yesterday's vulnerability, that seems to be expected to continue given the fact that there are almost 15 stocks which are in the FNO ban. So keep an eye on the index as a whole. The other point being that the Nifty put-call ratio, that although it's not at those 1.8 levels, but still on the higher side, close to 1.66 levels. So this is also something which indicates that there will be some bit of a volatility. Talking about the levels now, remember 10,750 call, that added close to 5 lakh shares. So keep a upside resistance of close to 10,800 levels around, because the premium over there is around 47 rupees. And on the downside, there will be a band, I believe, around the 10,650 levels, given the fact that the 10,700 put, that has shed close to 4 lakh shares, and the premium over there is 67 rupees. So the band we'll be working around will be around that 150 points mark. On the upside 1,800, on the downside 1,650. On the other hand, talking about the global cues, nothing much to talk about. If you see the European indices, they ended in the green, but Dow, that was more or less flattish, and the SGX Nifty today morning, that is also indicating a flattish opening for our bosses. Back to you.
Okay, all right. Thanks so much for that, Naveen. But give us some stocks that we can focus on in today's trade, Naveen.
So, okay, the big boy TCS, that will be clearly in focus given the fact that the company has signed a deal worth $690 million with MGM Prudential. And remember, this is especially in the BFSI space for a period of 10 years. This comes at a time when recently, if you remember, a week back, the company had indicated that BFSI as a segment has been seeing some traction, expected to see some traction, in fact, in the next 2 to 3 quarters. On the other hand, Sun Pharma, some settlement of patent litigation for their generic Linzess in US. On the other hand, Texmaco Rail also will be in focus. The company has been setting up a food facility as well as a logistic park in West Bengal. So keep an eye on Texmaco Rail. Capacite Infra, the stock has already run up post its IPO. Now we understand that there is a rating upgrade by India Ratings. The rating upgrade is to India Ratings A versus India Ratings A minus earlier. Quite a few numbers have started trickling in for Q3 of FY18. I'll begin with Agrotech. Fairly decent set of numbers. The revenue growth, that is something which I didn't like because it was up just 3%. If you see the historical trend also, nothing much to take home or talk home about. On the other hand, margins, well, there we have been seeing some improvement, majorly led by some cost cutting that the company has been doing. Margins have improved by close to 400 basis points. So that comes in as a positive. One of the most expensive stock in the dairy space, but now the company has been posting a lackluster set of numbers. Revenue is up 7%. Though if you see the operating margins, they are down close to 150 basis points. Expect the stock to be in red in today's trade. Also, Jai Bharat Maruti is more or less inline set of numbers. Revenue seems flattish, but the jump has been seen in the overall operating margins. That has jumped by 880 basis points at 8.3%. So expect the stock to be in the light green in today's trade. Back to you.